Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of December 2023 and we're publishing our gold and silver weekly update for the week ending the 8th of December. Last week, gold and silver markets surprised traders and analysts alike. Why and how? Well, let's take a look. First, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comments section below for those who have not yet joined that channel. Okay, gold and silver prices fell last week, and silver very heavily. This surprised analysts and traders alike, and whilst we predicted there could be some consolidation, the significant fall in the price of silver surprised even us. So let's look at prices and then we shall comment further. Gold fell $67 last week, falling from $2,072 to $2,005, having hit a high of $2,198, nearly $2,200, and a low of $1,995, a fall of 3.3%. In sterling terms, gold finished the week at £1,598, that's down £32. And in euros it closed at 1,866 euros, that's down 39 euros. Although gold fell, it once again, during the week, reached an all-time high in dollars, euros and in sterling. But it was not to end up that way. Silver fell a considerable $2.45, falling from $25.48 to $23.03, having hit a high of $25.94 and a low of $22.95, a fall of 9.6%. In sterling terms, it closed down £1.71 at £18.39, and in euros, it closed down €2 at 21.45 euros. The gold to silver ratio rose a dramatic 6 points, or nearly 6 points, rising from 81.3 to 1 to 87.1 to 1. The difference between gold's high and low was a year record of $203, and the difference between silver's high and low was a substantial $2.99. Now, this is what we said last week concerning our forecast. Our prediction for gold this week is that it will trade between 2,025 and 2,125, with 2,000 and 2,150 as outliers. Well, gold exceeded the top of our outlier range, albeit for a very short time, by as much as $48, and narrowly exceeded our lower outlier range by $5, though it did close within that outlier range. When gold hit nearly $2,200, had we been home, we would have sent out an alert stating it was rising too rapidly. Unfortunately, we were away for 3 days, which was a shame and prevented us from doing so. Now, our silver forecast last week was that silver would trade between $24.50 and $26.50, with 24 to 27 as outliers. We did say we couldn't really see 27 being reached. But the silver price movement did surprise us, though, but unfortunately to the downside. It rose on opening, which it was what we anticipated, then had a continual descent really throughout the week, falling lower than the low on our outlier range and closing almost $1 below it. We shall discuss the reasons for this in a few moments after looking at other financials. Now, Bitcoin stands at $44,171, though it's up and down like a yo-yo, but that's up a huge $5,371 on the week. Equities were very, very marginally up, almost unchanged for the week. The Dow Jones was up 2 points at 36,247, the S&P up 10 points at 4,604, and the Nasdaq up 98 points at 14,403. The FTSE 100 index up 25 points at 7,554. Oils were lower again, good news. Brent crude closed down $3 at $75.84, and Brent crude closed down $2.84 at $71.23. We're getting to that $70 level. Let's get it below. The dollar index stands at 104.01, up 0.75 points on the week. Now, in last weekend's update, we pointed out that the jobs figures were going to be pivotal towards gold and silver's advance. Well, on Wednesday we had the ADP employment report showing a similar number of new jobs for November compared with October. That should have given us a warning. Tuesday's services PMIs were stronger than market expectations, but it was Friday's non-farm payroll, or US employment report as they call it now, which effectively guaranteed gold and silver's demise. Yes, 199,000 new jobs for November compared with 150,000 in October, and against expectations of no more than 190,000. To make matters worse, though arguably better for the US economy, the unemployment rate fell from 3.9% to 3.7%, thereby potentially ruling out any consideration for interest rate cuts for some time to come, as the Federal Reserve's cooling measures seem not to have been successful so far. The increase in hourly wages for November just sealed the deal on gold and silver's fate, seeing them both fall sharply on Friday. Now, this coming week we have additional data which could help precious metals either advance or push them down further, and I suspect it might be the latter. On Monday there is nothing scheduled, but on Tuesday we have the CPI index for November. That's key. And then on Wednesday the FOMC's interest rate decision, which obviously will take into account what happens to the CPI. On Thursday, US retail sales, and then on Friday the industrial production for November. Now, as far as silver is concerned, the fact that it is broken below the 200-day EMA will continue to cause downward pressure as it's broken through a significant area of support multiple times. Now, according to Christopher Lewis of FX Empire, and I quote him, "Now that we're below the 200-day EMA, I think that a lot of technical traders will get involved. And at this point, I think if you're going to get involved with metals, you're better off getting involved in the gold market, as it isn't anywhere near as volatile as this contract." Unquote. Point we raised many months ago, that we will see far better returns in gold than silver during this period. Silver, though, will come into its own once rates have declined and the economy begins to grow rapidly. As far as gold is concerned, it is now short-term dependent on what happens this coming week in terms of the CPI and the Federal Reserve. And what the FOMC does and say on Wednesday is crucially important. Now, we do not expect them to raise rates, but we do expect them to adopt a more hawkish stance in their rhetoric. This will not bode well for gold or silver. We think silver will take another tumble, even though it's already fallen by nearly 10%. What a difference a week makes. So, what's our prediction for gold this week? Well, we expect it to trade broadly within $1,950 to $2,050, with $1,900 to $2,100 as outliers. Let me point out, if interest rates were raised on Wednesday, then you could knock another $50 to $100 off that prediction as well, towards the lower end. However, we're not expecting rates to go up, but we are expecting Jerome Powell to be ultra cautious and warning that rates will remain higher for longer. Our silver forecast is that silver will trade between $21.50 and $23.50, with $21 towards the lower end and $24 as outliers. But if technical traders really jump on this bandwagon and push that price down, you might see a temporary dip even below $21. We'll have to wait and see how much of a gamble they are willing to take. What do you think? Do share your thoughts. Thank you so much for listening. Please, we'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. Don't forget, pop on over to Finances Do Matter, sign up there. Have a safe, enjoyable weekend, and as always, a prosperous week ahead.